Welcome to my world. I'm Takhar, and I want you to come follow me on my journey as I document the ups and downs of running a business. I've been in sales and service for over 25 years. See, my cup's full now. It's my time to give back to you. The conversations I'm having with guys and gals in the industries of real estate, entrepreneurship, and leadership. Make sure to subscribe, like, comment, and all you have to do now is sit back, relax, and come into my world.
Hey, it's the Takhar podcast with your host, Takhar, and your co-host, Laura Elto Stewart. How you doing, Laura?
I'm good. I thought you were about to screw that up there.
Well, I told you, it's 145 episodes now. I told you last week that I'm getting a lot better with making sure that I remember it's no longer the REC.
That you know the name of your own podcast show, and it happens to be your name. It's like, how do you mess that up? But you still managed to.
I'll tell you how, because you guys brought acronyms in my world, which was JTP, which stands for Takhar Podcast.
Spell acronym.
Well, no, not today. Not today. We're not going to do that. It's not a spelling bee. This podcast is going to be all things what's in Rick Bachalo's life, who's the president of ICI Canada. How you doing today, Rick?
Awesome. It's a great day. And before we get started, just a quick shout out, a thank you to you guys to be part of the podcast. You know, your great cause and your mission. Absolutely. I've looked at several actually of your episodes. Great content, great people, great format. Love it. And you know, the thing about both you and Laura is you're genuine and authentic. And that's key in today's world. I don't care what it is, but genuine and authentic. So the one thing I always say is it's not the words that people are going to remember, whether you say it or I say it. It's how you made them feel. And that's a week from now, a year from now, or 5 years from now. And that's the key, as you guys got it, both Laura and yourself. And yeah, let's have some fun.
Well, it's good because Laura was thinking of kicking me off this podcast, but
one of these days, hopefully, and then I'll rename it. I gotta admit though, I did not anticipate being shown up by a background today with most people working from home. And we did a podcast once at a Porsche dealership, and I never thought we would see cooler cars than that car that we were in that day. But my gosh, your background, tell us a little bit about what's going on behind you.
And sorry, listeners, if you're taking your dog for a walk right now, you're not seeing it. Make sure you jump onto the YouTube page to take a look at Rick's background. Go ahead, Rick.
Yeah, perfect. Thank you. I always say this is what happens when you leave a mortgage guy home alone for 10 months, right? You create this. And so a little gasoline in the blood, a little bit of a car enthusiast, and a couple of Chevys, I call it, in the back, a couple of Corvettes. And everybody has a pastime, right? Or something that is a stress reliever. And that's what those things happen to be. So a little bit of motorcycle racing, my misspent youth, and a little bit of cars later in life. So all good.
Yeah, they're definitely not just a couple of Chevys back there. Those are some beautiful what's the years on those? What year are those?
Those are both Z06s, and they're both track cars. One's a 2015, the yellow one, and the red one's a 17. And yeah, they'll put a smile on your face. Yeah, they got a 0 to 60 in 2.95 seconds. So it'll change the expression on your face.
I love that.
Yeah, and for all our listeners who are probably thinking when they read the description for this episode today that we were going to talk about mortgages, commercial mortgages, how to grow in your career to be the president of a big company. And here we are talking about cars. And I love this because Jazz and I say this all the time, right? Just talk about what you're passionate about, and the other stuff will come as well. We're more than what we just do for a career. Jazz and I are both realtors. I rarely talk about real estate, in all honesty. I like talking about fashion, my dog, and all sorts of other things. So I completely love this. And next, when the world opens, like, we got to come over there and try these things out.
And you forgot, Laura, the fact that you're a burger connoisseur. I mean,
I am a burger connoisseur. Yeah, that's true.
That is
true
too.
Where is home for you, right?
Well, home is Winnipeg, actually, and it's, you know, I call it wonderful Winnipeg. And in my career, I've had a short 35-year career in commercial real estate and mortgage investments, and I always say I've been asked to leave 4 times. I've been asked to go to Vancouver, Toronto, Denver, and Calgary over the years, and it was a no, and no. And I still was employed, which is amazing. But I've learned a lot. So I've covered Canada, you know, East Coast to West Coast for both real estate and commercial lending. and then also south for the initial part of my career. So it's been a great career. Wouldn't change a thing. Lots of learning, and you hit a few speed bumps along the way, but lots of successes as well.
Now the career, does that, like, how long have you been involved in real estate and lending for now?
35.
35 years.
Right out of school. It was a crazy story to.
What did you do in school? Yeah, please talk about, like, what did you do in school?
Yeah, it was a business grad at University of Manitoba, and a good group of people, and amazingly, I applied to Great West Life at the time, now branded Canada Life, but Great West Life at the time, 1985. I'll date myself, and there was 320 business grads that applied for the job, and there was a position for 2 in the training program in the investment division, and I happened to be one of the 2 that they picked out of 320. So I basically, was into U.S. commercial mortgages, and, a couple months go by, and finally I got the courage to ask my leader, my mentor. His name was John, crusty old sort, but brilliant, soft-hearted, great guy. And I walk into the office and I asked him, so it's after a couple of months, why did you hire me? And he sort of leans back in his chair, and I'm going, oh gosh, this is one of those moments where I shouldn't have asked the question, right? So anyway, he leans back in the chair. He goes, wasn't because of your marks. I go, what? So he's put me on my heels now, right? He says, well, certainly wasn't because of your marks. We went from 320 down to 50. We interviewed 10, and then we picked 2 of you, and it's because you race motorcycles. I go, what?
Interesting.
It's because you raced motorcycles. You were passionate about it. You took calculated risks. You were driven. You won championships year after year after year. That's why we hired you. And I went, it wasn't because my nose was in the books getting great marks. Nope, nothing to do with that.
Do you remember, Rick? Did he ask you, like, about a passion of yours? Like, how did that conversation start about?
During the interview process, it was, part of a resume, and you throw it on there, Canadian champion and national championships, blah, blah, blah. So it caught their attention. And then I guess when I spoke about it, kind of lit up, right? And then they caught on to that. And they remembered that. So as they're, funneling through all the people, ultimately they picked me because of that. I misspent
yesterday. It's so funny that we're talking about this, right? It's just how the universe works. Laura, I mentioned to you yesterday that I was watching some videos on YouTube. I got into a rabbit hole of Chamath, who happens to be a CEO of Social Capital, but was one of the first 6, 7 executives at Facebook. Also owns a massive part. I'm not sure if he does like today, but he did for a very long time own a part of the Golden State Warriors. And when he spoke about, somebody asked him a question like, what do you do when you're hiring people? What's some of the questions you ask? He goes, look, I keep majority of my interviews down to about 15 minutes, 12 to 15 minutes to be exact. And the one question that I always ask is, tell me something that you're passionate about. And he goes, I usually let them go for about 1 to 2 minutes. And the reasoning behind that, he goes, you can really get to learn a lot about someone when they're speaking about something that they love and that they're passionate about, because in business, shit's going to hit the wall and hit the fan. And if you don't care, a lot, that's going to start to show. And in a team environment, it's going to be very tough. I know you had something to say, Rick. Jump in, man.
No, absolutely. I'm agreeing 100% that your passion is there, and I'm finding as my first 100 days, I made a sort of a mission statement. First 100 days at Canada ICI is I want to meet each and every person. So there's a team of 80 across the country. Sort of Calgary, Edmonton, Winnipeg, Toronto, Ottawa, and soon to be Montreal. And so there's 80 team members. So I'm meeting everyone. I'm probably about 20% in because I started February 1st. Absolutely amazing culture, amazing team. And it's getting to know. And I am asking about their interests. I am finding about them, what makes them tick. And I've got there's high-end hockey players, there's snowboarders, there's national, squash team players. Like, they're driven. These guys are driven, and excellent culture, I have to say.
So it's so interesting because back in the day when I was first out of university and I wasn't really sure what I wanted to do, I didn't think I had the grades to apply for the job that I went to school for. But learning from you, I probably should have tried anyway.
We just talked about more of your passion of skiing.
Yeah,
right?
well, I let that go. And I decided to apply for an internship at Holt Renfrew. So luxury department store here in Canada.
Yeah.
And there was a lineup of people outside. Like it could have gone to anybody. And there were girls who had so much experience in fashion. They went to school for it. And here I had a nutrition degree and I didn't really know why I was there. I had no experience at all. And on my resume, I just talked up the fact that I like worked in ski racing. I was a coach. I skied a lot. And so I kind of like got to hang out with a lot of people and who were high net worth individuals. And I was trying to make that comparison. And that's the reason I got the job, because the department head at the time, she was an avid skier and her family skied and she just loved that about her background. So I always tell people now when they say, well, how did you get into real estate? You must have always known you wanted to be a salesperson. I'm like, are you kidding me? I made so many, like, I'm going to call them mistakes, but they're not mistakes. It's just part of the journey, right? And like every little decision you make along the way somehow manages to get you where you are. And I imagine, Rick, that to get where you are now, I mean, it's probably not been a linear direction. Can you tell us about some of the ups and downs and turns you've taken?
It's been a great career. I tend to focus on the positive, but when in commercial real estate, starting out back in 85, rode that roller coaster right up from 85 to 90. Then in 1990, sort of the wheels fell off the bus in terms of the Canadian real estate, specifically Toronto. So from 1990 to 96, it was a free fall. It was almost like, COVID, which is a serious thing, but it was like COVID for 7 years in the real estate market. The rest of the economy was fine, but the real estate market, commercial, was taking it on the chin. And that was a learning experience. It wasn't just a month or 2 months, 6 months, a year. It was 6 years and kind of was down. So it builds character. So that was a challenge. We rolled through the 08-09 liquidity crisis. It sort of came and went in Canada. Not so much so in the US, but a little bit more challenging for them. But you live through those things. But it's all about building teams through good or bad. And I use one particular Rick Bachalo tool. It's basically it's a diamond shape, and at the bottom is trust and integrity, the most important item for sure. So start with that. It's the foundation, but everything is resting on that. Then over here is expertise, work ethic on the top, and emotional intelligence. So 4 points. If you've got all 4, hire that person. Absolutely hire them. And if it's a business, invest in it. And so when I looked at Canada ICI, all 4 of the owners ticked all those 4 boxes. And then the culture was that as well. And now, as I say, that was me looking from the outside in, and you do the best you can, your due diligence, but now I'm on the inside and I'm interviewing every single person, 1 to 3 a day. I spend at least an hour a day with every single person. And
when did you just start at ICI? It was relatively recently.
February 1st. I retired from Canada Life on January the 31st. And I started as president of ICI on February 1st.
And so why ICI? Like what like, was it the trust, experience, work ethic, and emotional intelligence that made you think, okay, this is the company that I want to be in? I see this in the founders. Talk a little bit about what made Rick choose ICI. Yeah,
really good question. Again, had a great career, sort of 3 different careers at Great-West Life, now called Canada Life. So US commercial mortgage lending, then equities, buying and selling, asset management, property management, leasing, investment sales, learned that craft. And then at the end was on commercial mortgages, but on the Canadian side across Canada. So US and Canada, mortgages and real estate, I'd done it all. And in the last sort of 16 years since they started measuring us from incentive comp perspective, basically we had never missed a target ever. So I called it 16 Super Bowl rings in a row. And I've never missed a target. So this opportunity came up, and frankly, it was refreshing to start fresh with a beginner's mind. But take all that 35 years of experience and then bring that along to this new company. And that was an opportunity I couldn't pass up. It's basically climbing a different mountain in the same mountain range. We're still dealing with commercial real estate. Canada Life was a lender, and Canada ICI is a broker. And they're high performance individuals. They're doing 4.6 billion a year in commercial mortgages through 80 people.
And is it just commercial mortgages there right now? Or is it no residential, right?
No residential, just commercial mortgages. Yeah, both CMHC insured, both construction, both term loans. So they do it all. Yeah.
And you mentioned there's 80 part
correct.
of the team. And I love that you're meeting with each and every one of them. I definitely, both Laura and I want to talk about kind of your thoughts and forecast on what's going to happen with not only interest rates, but just the whole commercial space in our country in general. But before we get to there, a lot of our podcast listeners are salespeople and entrepreneurs. What's some thoughts and or tips after 35 years of you being in the business and now you overwatching and overseeing 80 high performance brokers? What's some tips for some salespeople, right?
It's back to that where I started out. It's being genuine and authentic. Those are absolutely key. The honesty and integrity, you can't go wrong with that. Like those are absolutely key. I think the approach is focus on the solution, not the problem. It's something that I've learned over many years, and on LinkedIn they did a bit of a story about me, and so it's a longer story, but listeners can dig into that one about racing motorcycles in my youth and learning that from that craft from my dad to focus actually on the solution, not on the problem. It worked wonders, and it does the same thing today. The other is confront the brutal facts. Don't run away from it. Confront the brutal facts. Pivot, adapt, and then focus on the darn solution. Don't worry about the problem. Focus on the solution. So it's an attitude type of thing. And
what do you think are some challenges that brokers are facing now that we might be able to even help them through our conversation? Like, what are you hearing from some of your team members? Is it a lack of business? Is it the fact that there's no inventory, so they don't have enough clients? Is it competitive rates? Like, what are you hearing out there from your brokers?
Yeah, there's about, of the 80-30, or I call it the fire breathing dragons on the front line, the brokers, and then there's about 25 underwriters to make sure everything's accurate, correct, and all in its place, the integrity, and then HR, IT, accounting, so that those front runners, if you would. And it takes a team. Just don't get me wrong here. I talk about underwriters and brokers. You cannot be successful without, each one has to be there. Again, if that integrity in the numbers and the valuations is not there, the brokers are going to fail. If you have a rock star of a pack of underwriters, but they're not bringing any business in the door, opportunities, well, they're going to fail. So you need both. They work in tandem. So the future, though, it isn't lack of business. It's the Canadian economy, touch wood, today is doing very well. And of the four asset classes, I call them the four main food groups, we eat them all. Sort of industrial, apartments, retail, and office. So we don't know how this story will end with respect to commercial real estate in Canada. And I know it's maybe not a segue to your earlier question, but the brokers are doing very well on industrial, very well on apartments, and understandably. And retail a little challenged, as you might guess, and office even more challenged as to how that story will end. And we don't really know just yet. So right at this moment, there's lots of business, and we're hiring. I'm later this afternoon meeting with a new prospect, and tomorrow morning another new prospect. So we're on a growth path, which is a good place to be.
I wanted to take us back high level for just 1 second, because I'm a bit dumbfounded on the new people coming into businesses, taking over, shaking things up. I mean, in my mind, I kind of have it pictured like it's a movie, right? And you come in, guy from the outside, and you have these massive big ideas, and the company sucked before you got there, and you're here to like shake it all up, and you're going to have that locker room talk and Ray, and everyone's on board. Is that how it is? Or like, is it really just like you're just here to, because it sounds like you really respected the business before
Oh, yeah,
coming into
for
it.
sure.
And so is it kind of just incremental change? I mean, obviously I know you're speaking with everyone on an individual level, but how do you get their buy-in? I mean, I'm sure a lot of people are like, oh, here we go, another person thinking they're going to make all these changes and they don't really fully understand how it operates here. So what's your mindset going into something like that?
So as you started out, it could be a turnaround, or it could be a fix it. And that's not the case with Canada ICI. They actually were doing extremely well, before I ever came on the scene. So a testament to them. They were high performance and integrity and a great culture. That was attractive to me. That said, they're at a level now where, in order to scale, and they will, in order to scale, you have to do things a little differently. So it's not a change, it's not a fix things, it's not a correct things, not at all. It's refinement and scaling and growth. And that's what it's all about. It's new markets. It's something that, one of the items is look where no one else is looking. When I say look where no one else is looking, before the competition does, find out where that next piece is. And that might be, a segment, and not to reveal too many secrets, but we've got a few items there that we're looking at, actually a year ago and now, and could happen. So the team knows about it. I've shared with them. So there's some interesting things there. So it's not a fix it because it's broken. But that's part of my strategy of meeting with each and every person. You cannot implement change until you earn their trust and their respect, and it goes both ways. And once you have that, though, and you start from that foundation, now you can build things. Now you can affect change because they know you're trying to make it better, not because of a title. That would be the absolute wrong thing to do for any leader, is because of a title. It'll never work, or you'll get change, you'll get it quick, but it won't last. So you need to earn their trust and their respect, and listen. So it's the first 100 days is meet, listen, learn. Then it's sort of formulate plans and recommend them. And then lastly, execute. It's a simple process of coming in, but it starts with meet, listen, and learn. And that's from the people sitting in every chair. They have an expertise that I don't have. They've done something better than I could possibly do. And they've done it over years. So when I went in, I asked 3 questions. What do you love about Canada ICI? Please, before we meet, they know these questions. What do you love about it? What would you change if you had a magic wand? And number 3, what are the opportunities you see from your chair? And then I asked them at the end, please rate it on a scale of 1 to 10. 1, it sucks, and 10 is awesome, right? So 4 questions, and each and every person I get this answer. So they, from their chair, when they say, I love this, I love the culture, I love the integrity, it's a business in a box, it's a number of these things, they're passionate about that. I want to preserve that. I don't want to change that up as the new guy coming in. That'd be the last thing I'd ever want to do. Now they talk about, okay, what is it that you would change if you could? And they come back and they've got some really well thought out answers. And it's minor, as I said it before, it's not wholesale change, it's tinkering, right? It's refinement. If we could just do this would be better. And they're always careful to say, I had one first thing this morning, 2 years in, young person, full of energy, knows where he wants to be. It's just refreshing. And he's always said, yeah, here's a suggestion, but it's not bad. Like it's really good, but you could do this. That's what I'm hearing from this group. And now you go in and make those changes, but it's their ideas. It's not
Right.
necessarily
They
mine.
feel
I'm not
heard.
gonna shake it up. Yeah, they're a part of it. Then I will create focus groups once I've done this, and instead of the first 100 days, I'm going to do it in 65 days, and I'm enjoying every minute of it. And then I'll create the focus group, and I'll pick 3 key let's fix underwriting. You guys, you want to fix it? Let's make some refinements and changes, and then let's do it. And so they're going to be part of the solution. They will be the solution. Then we'll air it up to senior management and try and implement. So they're part of the growth going forward. As I said, when I took the seat, I want to leave it in a better place than when I started. And I started, and it was a great place. Don't get me wrong. I wouldn't have left if I enjoyed what I did, was successful at it. But this is an opportunity, as I say, with a beginner's mind and enthusiasm. So I want to leave it in a better place. I said, this entity, Canada ICI, should grow and be there longer than me, right? So whether I've got a runway of 10 years, I don't know, I'll keep doing it till it's not fun, and health willing. So, but some of the younger people, they've got far more runway than I do. And so I want to make it better for them and pass that on. And the other observation is a cultural diversity. Like, it's incredible. Just anyone can go flip on and take a look at the website. They focus on the people. There's a few buildings in there actually to say what we do, but it really looks at the talent. That's a refreshing part.
This kind of reminds me of a Simon Sinek, like, people don't buy what you do, they buy why you do it, kind of thing, right? Like, you're establishing a brand through your people and through your community, your culture at your work, and everyone eat, breathing, and loving what they do, and that's going to come out in the work, regardless of whatever the work, the service, the product it is that you're providing.
Whether you're selling real estate or selling cars or selling stoves, doesn't matter. We're all in a sales business. And again, one of my mottos, which I've used at Canada Life, is, there's 3 of them, is you get one chance to make a great first impression. I don't care if you're selling a house, a car, an investment proposal to a committee. Whether you're dating, you get one chance to make a great first impression. Number 2, better late and right than early and wrong. Boy, that's, sort of bit me in the ass a few times, where you rush it, right? Where you worked on something, you just want to hit send, like just hit send, right? You've worked on it for so long.
I'm done with it. I just want to get
it out there.
you just want to let it go, and you have to have that resolve to just hold back a little bit. And then the last one is, make it easy for them to say yes.
Oh, I love that.
That's music to your ears, Jazz.
I'm not sure if you saw the sign behind Andre. Do me a favor. Let's show Rick the sign behind Laura and see if he can see it. Maybe Laura moves.
Here, let me move out of the way here.
There's a sign here.
Removing friction.
Oh, perfect. Yeah, exactly.
We always say, make it easy for people to buy.
Yeah, it's exactly the same premise. It's universal. Whether, again, you're at a committee, meaning when I say make it easy for them to say yes, work your ass off, like work on it, right? Do your homework, anticipate the questions, do the right thing, and be prepared. Don't go in, 80% of your potential. You go in with 100, and then there's no regrets. Like life is not a dress rehearsal. Like, it's this, you get one shot at it, go for it. You're in it to win it. So take advantage of it. And so those are the mottos, and again, excited about it. And so are the people on the team. So I'm, as you can tell, pumped up about being
100%. I love it. I mean, we feel the energy coming right through our screen when you're speaking about your team, and I'm excited for them, because I think they have a leader in place right now that is going to help with their growth, and I think that's very important. I'm getting to know you now, Rick, and I can tell already that you're someone that wants to help somebody grow. You're not just in it for yourself, and that's going to be a treat for everyone around you. I mean, when you were speaking and talking about the people in the company, I always laugh with our crew around here. There's 11 support staff and 41 real estate agents that both my partner and I manage, and Laura's the VP of sales and marketing for our company. But I stole this from Laura. We are a bunch of misfits around here that individually on paper you'd be like, ugh, I don't know how much
these guys don't belong in the same room.
Definitely don't belong in the same room, Laura. But on top of that, like I think we're a lot more deadly together than we are individually, even though that we come from like totally different backgrounds. You're looking at a guy right now, Rick, that I barely passed high school. Laura, MBA, marketing and branding and just, someone on paper that's brilliant. You put me in front of a camera. I like to.
Are you saying that not on paper I'm not brilliant?
No.
Just out of curiosity.
Well, no, I said, I guess I'm trying to say that. Yeah. But what I was really trying to articulate was the fact that, like, if when you put the camera on, I'm comfortable. I'm very and with you, Laura, it didn't start like that, but we helped each other. We got through it. And that's just right across the board through our organization. So it's just a pleasure. Like I'm more than I'm more excited for your people than I am for you, Rick. Like I know, like, you know, you've been at this for 35 years. You kind of like, you know, you got it nice and systematized, how you're going to meet people and all that.
Yeah, even if he doesn't like the job, I mean, he's got it nice and cushy over there. He'll be fine with his cars and his beautiful place. He'll be all right. But it's the people you're going to impact.
I definitely want to pivot a little bit, Rick, because
Sure.
I mean, I want to get into that brain of yours in terms of how much experience you have when it comes to the lending industry and real estate as a whole, for you to go back to the early to mid 90s and talk about kind of the drop, and then the 08-09 recession, and then now with what we're going through. So, you know, from your eyes, I mean, a lot of our listeners as well are investors, and investors in residential, but also needing commercial financing, like 5 doors and above. A lot of our clients are looking for that. Kind of like, what's your forecast, man? Let's start off with office and retail. I'm very curious, right? Because I personally believe that from the office space, I think that most corporations, big corporations, the major banks, I've seen a couple of reports already come out, RBC specifically, that here in Toronto, they've already noticed productivity drop significantly with people working from home. And from a cultural perspective, it's been very tough on organizations to keep the culture going. You know, from an employee's perspective, staff perspective, I mean, to get promotions is tough, right? Like you're not around. It's very, very tough. And so I think, look, the next stage might be a hybrid. And this is just my personal opinion. I think the next stage is going to be somewhat of a hybrid, bringing people back, like maybe, you know, 3 days a week and allowing them to work from home. But I think the shift's going to happen. Call it a year from now, once borders are open, everyone's vaccinated, and all that is done, that we'll get back to 5 days a week back into the office, which will help the office and retail space when it comes to commercial. What's your thoughts on that?
Yeah, no, you should be part of Harvard. Meaning you've hit the nail on the head. Actually,
I think we should stop this podcast.
Don't tell him that. He doesn't need to have that. His head's big enough.
Here's why I say that is there was a couple of studies, one where Cushman and Wakefield and George Washington University got together, and Harvard Business Review. So there's really 4 takeaways. Basically what it said, you know, from a North American standpoint with respect to office, 78% of the people long before COVID wanted flexibility. They've been starving for it for a decade. They wanted more flexibility. Was the corporate business culture ready to do that? Hell no, they didn't want that, because as you said, productivity and how do we control, how do we manage? Well, guess what happened? COVID comes in. Now it went from 100% in the office to 100% at home. I can speak, you know, from you know, a Canada Life perspective of the 11,000 people rattling around Canada, 90% work from home, 90. That's, and you know, the show must go on. When you have death benefits, disability, or a life insurance, you have to keep it going. They pivoted and they did an amazing job. So kudos to them. And so were a lot of other businesses. So 78% of the population did want flex. Now they've got it. It wasn't really flex because they're forced to be at home. Now it's different. They wanted it. Having said that, the study also said that Gen Z, 24 kind of and under, and then millennials, 25 to 39, 70% are struggling working from home. They don't like it.
Because they weren't also prepared for it, right? Like I'm in that, I'm 39 right now. Laura's in that age group as well. Like we weren't prepared for it. It's not like we had everything ready at home.
No, not at all. There's all sorts of connectivity and pets and kids and homeschooling and, you know, all of those challenges. And the world has pivoted, I think, remarkably done a great job. And so the Harvard Business Review at the end of the day said there's an inflection point. There's a point at which, whether it's 3 days in the office or 2 days at work or 2 and 3, somewhere along that is the flex. So if you look at Salesforce, and they're 54,000 people, 65% opted for flex. 65% of that population, that group. Now that has repercussions that when they figure it out, they're not going to need all that office space to pay rent on, right? So there's some challenges coming down the pipe. So and then the last point that really comes up with it depends on the person. You can work from home or work from work from the office. Meaning, if you are high performance, driven, and results oriented, you could work on Mars. It doesn't matter. You're going to be driven wherever you are. Now, on the other hand, if you're not that personality type, suddenly, you're doing laundry and you're watching Netflix and you're making dinner and you're doing all those other things. And you know what? Productivity is not down. So it's somewhat person dependent and personality. That's hard to manage. That will be very hard to manage. So I think it will be a blend. It's about to change. I think there's a number of corporate entities right now going at budget time going, we did all of our business and we didn't need those office buildings, and they've been empty for better part of a year. That's a big number we're paying. Do we really need to pay that? So I don't think it's going all the way till everybody works from home. And I don't think it's going back to the office 100%, but I do think there's going to be a blend, and that'll be the talent around the world to figure out what that right blend is for their specific business.
Now, you spoke a little bit earlier about your brokers doing really well in the industrial space. What are you guys seeing there right now? What's kind of the trends around industrial real estate?
Absolutely, the golden asset class. Like, it's just sought after. Developers are giving it a hug. Lenders are giving it a hug. They want it. It's stable in all of the major CMAs across Canada. Wherever there's a hockey team, basically, you could lend there. The GTA, Vancouver, Montreal, like there's lots of business to be done there. And yeah, rents have, some have doubled in 5 years. Land values have gone up. It's sought after. It's safe. So I think that's a very sought after asset class. And next to it would be multifamily. Apartments, if you would, condo. Weathered the storm better than I would have originally anticipated. Yeah, a little bit of here and there, a little bit of rent reduction, a little bit of vacancy. Is it propped up by stimulus? Yes. It's correlated with unemployment. If unemployment goes for a free fall, stimulus falls away, you're going to see some stress cracks on the apartment side. But to date, it's pretty good.
Yeah, I mean, from an inventory perspective here in the Greater Toronto area where we're based out of, I mean, there's no supply when it comes to multifamilies. I mean, we just have, if there's something that hits the market, you have 7, 8, 9 investors ready and willing and very, very able to jump on it. One of the reasons being because the financing is different than when it comes to residential financing, like 4 doors and below. Can you talk a little bit about, I think there's a misconception that when it's 5 doors and above, Rick, that it's only based on the rental income. My understanding is that it's the majority of it is based on the rental income, but they still look at Jazz, the investor, as well. They meaning the lender.
Oh gosh, yeah. There's without a doubt, it's the covenant. It's what's it worth? What's all about it? The credit rating, the net worth. How leveraged are you or not? Like, that goes a long way. So you have the asset on one side, and it has to pass all the tests, certainly for commercial. But it's also the borrower. That's integral. Every lender looks at it, and frankly, the brokers do too. They're not going to go down a rabbit hole only to have it not go together. So very important, absolutely important.
Now, would you say like 80% of it, I'm just throwing out numbers, would you say 80% of it is weighed to the actual property in itself and 20% on the borrower, or is it 50-50?
Again, it's probably, you should be at Harvard teaching, because it's probably you're bang on. When I say 80, would say agree with you at 80%, that's property, that's location, that's the market, that's the tenants, that's the leasing and the loan metrics. That would form the 80. And then on the other side is your borrower, call it a 20, whether there's recourse and how strong they are, how diversified they are, that sort of thing. So you're bang on.
I have to laugh because my husband, Rick, is in commercial real estate. And so people often think like we go home and sit at the dinner table and talk real estate, but it's so different. Commercial real estate is so different from what we do here on the residential side. And it's interesting to hear your perspective on what's happening with office and industrial, because he's been saying this as well. I mean, I think office space was doing quite well up until the pandemic. And now he's saying it's actually interesting because some of the office space in the suburbs of Toronto are actually doing a little bit better, because as people have moved out of the city, we've lost about 50,000 residents to move out to the suburbs as they wanted more space. Now, some companies are starting to think, well, maybe we should put our offices where those people are. We should go where the people are. So he's starting to see that difference as well. And then, of course, just like you said, I mean, industrial has been incredible. So now I feel like I can go home and have like a real conversation with him for once, as opposed to talking about, condos.
I think once he gets home, he doesn't want to talk real estate either. So
but it goes to show, though, that you really need to pivot. I mean, here, like just on our side, condos was booming up before COVID happened. Downtown Toronto condos. And then all of a sudden, condos not doing so well. So as salespeople, we have to be able to pivot, and you have to know a wide range of information about different asset classes and topics to be able to kind of move and trends.
Right?
Yeah.
So you're ahead of it, right, Laura?
Yeah.
And I know, Rick, you were speaking to one of our team members, Luke, and you were talking about, I'm not sure how much you're okay, like how if you're okay to share when it comes to kind of perhaps new regulations coming down the pipeline through CMHC. Is there anything that you're okay to share that our listeners and ourselves?
You heard it here first on the Jazz Takhar podcast.
Not yet. There's I'll just go back one step.
Yes. Yeah, for sure.
Is to Laura's direction was that movement to the suburbs is not just Toronto centric. That's across North America, the US. It is happening, and it was actually happening before COVID at a reasonable pace. Why? Because the values got so high in the downtown density areas. They absolutely got so high that they actually, the market was moving because of that, for affordability and for space. Now it just got accelerated because people didn't want to be, shoulder to shoulder in on the subway or going up in a 60-story building and you're cramming 15 people into an elevator. Well, that's not happening during COVID. So it shifted, it accelerated what was already happening across the country in terms of where people were moving. And that creates opportunities. There's boutique hotels being converted to apartments, both Edmonton and in Ontario. Know of both of those, actually. There's in the US, there's some office buildings converted to vertical farms. There's all sorts of things where you get entrepreneurs that are involved in commercial real estate and look at an opportunity and then go after it. And so there's lots of creativity happening. And so it's exciting. Again, focus on the solution, not on the problem. The problem is we have a sort of a mucked up downtown, but it will come back. But there's other opportunities happening at right now, and certainly people are taking advantage of them with the right ideas. And financing is a big piece, as you know, in real estate. It's a significant piece of whatever we do.
Not to put you on the spot, like just because you're talking about the downtowns and you've been in this industry and business for such a long time, do you see this taking 3-4 years, or is this something that once the borders open up? I guess the reason I'm asking this is because of the lack of supply that we've had. It's a major concern here in the GTA and right across right across the continent. I'm not sure if you're on this new app Clubhouse, and so it's an iPhone only app, audio only, and I've been connecting with so many brokers right across North America, and everyone in the States is having the same problem. There's just lack of inventory. Right. And in the greater Toronto area, values last year at the end of 2020, Rick, they went up a little over 13.6%.
Wow.
In the height of a pandemic.
Right.
We're locked down and values still went up 13.6%. It's let me just add one other thing. The borders were closed. So what we've always hung our hats on here in the GTA is that we've had 150 to 200,000 people come into the greater Toronto area year after year. Well, we didn't have that. It actually was down by 85%. And so because only the first 3.5 months allowed anyone in. And so it's hard to put your finger on it. it's really hard to put your finger on why values keep on increasing without people actually coming into the country.
Yeah, it is you build a city every year almost, 150,000, and it would continue. And your 13.6% is that's an after tax if it's your personal residence.
Exactly.
Right?
Yes.
For homeowners and people, you can't save that, right? You need to be in the game to get that appreciation. So I think that will continue. There hasn't been a financial crisis or a health crisis that the world has not gotten through.
So true.
Great Depression.
Rick, I wish you had told me that during the first 3 weeks of lockdown when I was miserable at home.
And it's stepping back and say, okay, Great Depression, 0809 liquidity crisis, disastrous in the moment, but we was there casualties and there was problems for sure. But did we as a whole get through it? We absolutely did. Again, SARS, H1N1, all of those things may have affected different areas. This one is different, but we will get through it. And there's no doubt in my mind, ingenuity and creativity and smart people, and we'll get through it. So I do think it will come back. Bank accounts of various people are increasing. And guess what? Everything goes back to the mean. So it's no different than January 1st, you say, I'm going to go lose 10 pounds, right? Or whatever it is, right? And you'll just go flat out, go to the gym, you'll eat right. And by March and April, it reverts back to the mean. So same as bank accounts. If your bank account was here and now it's gone up to here, when this cuts loose, you're going to be people flying. They're going to be buying a different car.
People are going to go on a frenzy.
That bank account's going to get drained right back to the mean. That's my personal view. And on a number of things, we, take someone that wins a lottery, $4.8 million, and 4 years from now it's gone, right?
The average lottery winner, loses it all.
It goes back to the mean. So I do think there will be people do something, be at a restaurant. We're social creatures. We want that. We need that. So I do think it will come back. I do believe that. And hopefully it will bring some of the retailers back. It's sad, very sad, of all the for lease signs that you see around on the small businesses. That hurts. That takes a long time to come back. If ever, that will be challenging. So I do believe it will.
That's the other one that I'm very curious about, because pre-COVID, majority of people still weren't comfortable with e-commerce, right? Like they just were not comfortable buying online. You probably know a couple of people who did it, and you did it a couple of times yourself, but like not for everything. Where now it seems like, look, I'm comfortable getting my groceries online and getting them delivered. I'm comfortable with, I needed a new wallet because my old one was just getting just older. And I generally like to go to the store and touch it and feel it and see what I'm going to be comfortable with. I need a new winter jacket, all kind of at the same time. And where I never would have bought those, any of those online.
Well, now you're more comfortable with the risk, right?
I'm
like
a lot more comfortable.
You had to be.
You had to be. And even though, you could do curbside pickup, I'm like, why am I going to go waste my time to even go pick it up from the store? I'm just going to get it delivered to my office here. It's a lot easier. And so it'll be interesting to see what happens with retail, right? Like, are they going to need the amount of space that they have? Could they get away with not having all the sizes? Maybe, I don't know, and maybe just having more mannequins up and allowing you to just try. I don't know what's going to happen. I'm very curious to see what happens with retail, because we're here in what's known as Shops at Dawn Mall. It's kind of an outdoor mall, and a lot of high-end stores. But as you mentioned, Rick, it's dry
lease,
right out there. It's for lease signs. And some of the major stores were here, but they're shutting down.
Well, and Rick, wasn't that asset class of like those big box, like in the suburbs, like the Best Buys and the, like the outlet malls, those were struggling, I think, anyways, right?
Yeah, there was a number of things. Fashion related was the kind of the first to go, and it's a very competitive environment. Pre-COVID, right? As you said, some were struggling and they may have debt levels that they couldn't sustain, or there wasn't the right business model of online and in-store experience. So this is in a transition stage. It was before retail, it just now stressed it. And to your point, if you could hang on before, and online shopping was somewhere in the 8 to 10% of total retail sales, and then it ballooned to 15 on its way to 20%. If you were just hanging on before, then you're out. You are now out. Like you didn't get another chance. You missed it if you didn't pivot, so to speak. And that's the part. Yeah.
And I would love to get your guys' point of view on this, but like in terms of restaurants, I actually think, like, you know, I feel so bad, and I'm so sensitive to the guys and gals that lost their restaurants during this. But that's the one industry that I think is going to make a comeback no matter what, because we're all itching. Like, how many times do we say, Laura?
All the time. I just want a beer from a tap.
Like, I'm not even a big beer drinker. I just want a
nice cold pint of beer with that free bread that they give you. I want the free bread.
No wonder you're still, like you were saying a couple of days ago, you're still trying to get rid of holiday weight back in 2000.
Yeah, my 2017 holiday weight's still kicking around.
But like, you know, all of us, I think, are feeling that, right? Like, we just want to sit in a restaurant, order some food. So I think that will make its way back, where again, the retail and the office is going to be very interesting. We obviously know residential and multi-fam has already kind of, it's actually superseded what it was doing pre-COVID.
Right. Yeah, no, and just to that point on restaurants, and there's survivors there. Kelowna, you know, sort of resort area, you know, in BC, beautiful on the Lake Okanagan. I have family there, and sister and family. And one of the restaurants on the water, they created pods. So acrylic clear glass pods. You can put, there's a full table, 6-8 people can sit there. They've got heaters in them, and they're rocking it. They're still doing business. Like, they pivoted and focused on the solution, not on the problem, and they're up and running, right? And it's a bit novel, and I suspect that will stay. If it's a rainy day, there are people still going to be outside. They actually transformed, and they're in there digging deep, making money every day. So I that goes off to those.
There's some restaurants here as well. Like, they've just opened up like a market essentially, and you can go buy groceries from them or kits to make the meals. Even the Keg. I mean, just a lot of companies coming up with like these really interesting ideas. The Keg does, like, you can like order a whole kit to make the Caesar salad at home, and they give you the steak and the steak spice. You can do it all from home, and you just go and pick it up. So, like you said, Rick, I think
not know that.
There's some really awesome. Creative. Exactly. Okay. You like, you know, that's just the way it goes sometimes. Like, you know, if the condo market drops, you and I might not have anything to sell, and no one's going to necessarily say, oh, that's unfortunate for you. Sure. You just have to figure it out. You have to pivot. And I kudos to the people who have. It's really impressive.
Well, look, I mean, in the first couple of months of the pandemic, our clients started to ask us for opportunities, but we weren't comfortable with suggesting any opportunity in the first couple of months. And then I think it was that third month when we started to open up opportunities to our clients, but only ones that had rental guarantees. So we had to pivot and say, okay, we'll go back to the developers and see who is putting their money where their mouth is. If Mr. and Mrs. Developer, you're going to be developing this condo project, if you're confident, or you're at least telling me and my clients to be confident, why don't you put a rental guarantee with it? And we went to 15 of them. 14 of them told us where to go, which was a no, and said, don't come back. But the one who said yes, we did 12 units there. Yep. Right. And now, funny enough, I mean, that building's going to be done in about a year from now. Rents have dropped in that area, but our clients are taken care of and covered because we got them a 2 or 3 year rental guarantee. So they're covered based on pre-COVID rents, right? And
the developer's happy, even though they might lose out a bit on the rent. I mean, they're going to take their money and go build something else and sell it at a higher price. So it's like they just need it out. It's a win-win for both parties, right? It's just getting to that point where you can be collaborative with one another to try and figure out a great solution.
That's a really good point in terms of where my eyes are being opened, going from being a pure lender to on the brokerage side is Canada ICI. They had 67 different lenders in 2020 that they placed business with. 67, not 2 or 3 or 10, 67. So you will always find the right lender for the right borrower for the right deal at some point with 67. And the other item they're doing is A/B structures. So if there's someone with that sixplex or a 66 unit apartment or a 366 unit apartment, and they can only get 65% loan to value for that from a traditional lender, and that's their comfort zone, then they top it up with a B note. So a second mortgage, a B note, and there's a number of lenders out there that play in that category. They're able to put it all together and get the borrower, instead of 65, maybe it's 82% loan to value or 85. And they're able to do that. And I'm seeing this happen every day across the country. And and they are catering to that one with the sixplex, because 5 years from now, he's going to have a 50 uniter, right? He's going to grow, going to be there. And so they are looking after those borrowers as well. So again, I'm learning every day.
Well, a couple of things you mentioned there, and for anybody who's new to this podcast, either if you're watching or listening, you should know that anytime you're thinking about investing into real estate, Laura and I like to think we're the most important people in the process, but truly,
no, you think you're the most important person in the process.
Yes, it's
the
true.
Harvard grad. Yeah.
My mom told me that, and I haven't forgot it. But really, truly, it is the guy or the gal that you're going to get the financing from. Not that the banks are bad people. They're not a nonprofit organization. And in Canada, and specifically in the Greater Toronto area, but right across the country, there's 6 or 7 major banks, 6 major banks. Hence why we always advise to start off with an independent mortgage broker, because as Rick just mentioned, 67 lenders they worked with. I'm in the real estate business, been in it for 16 years. I don't even know like half of those 67 lenders. I probably only know 10 to 13 of them, right? And so if you work with an independent mortgage broker, he or she is going to be unbiased, because it's not their money that they're lending you. So they're going to tell you about the 66th lender or the 33rd lender, because it's not their money that they're lending you. And they have an incentive, a vested interest to help you pay down that mortgage, to help you build out a portfolio, because unlike somebody at the bank, they want you to keep on amortizing over a longer period of time, because it keeps the money with them. The reason an independent mortgage broker has that vested interest is because if they treat you good, the chances of you introducing them to a friend, neighbor, or colleague are very, very high. So as much as you possibly can, look, I know, my dad came here in Canada in 1974. He walked into an RBC branch, and anything RBC till this day tells him, his son runs a pretty big organization, does not listen to his son till this day. It's whatever somebody at RBC tells him. Why? Because they sold him a bill of goods, and they said, look, as a new immigrant to Canada, you should always keep your money in the bank, invest into RRSPs. Like, I could go off on a 3-hour podcast on why you probably shouldn't look at RRSPs. But I mean, I get why a lot of people stick with the banks, but that's just not the way to do it nowadays. In my opinion, work with an independent mortgage broker. Rick, I did want to definitely talk to you about just kind of your forecast, more from an interest rate perspective, or any new possible guidelines that you might see coming out in the next 6 to 12 months.
Yeah, no, it's a very good question. We're asked about that a lot. I do believe it's low for longer. In terms of that's fairly commonplace. The whole world is addicted to low interest rates. And it's not, when I say the world, that's people, corporations, and governments. So you better be careful with your moving the throttle here in terms of moving interest rates, because everything's on the brink, right? We're massive debt, across the world, and we've just created that over the last 11 months. So I think low for longer certainly is the case. The yield curve has steepened, sort of your interest rate. On the low end on a 1 year is now the 10-year is in a normal yield curve, a little bit more normal, but it's being managed as well by the central banks and by the government to manage that as well, create liquidity in the long end, which is something they haven't done in the past. They've very much focused on the short end. Now there is a focus on the long end. So I believe it's lower for longer, and there's stability in interest rates. So when you talked about real estate and where you put your money, it's a great place to put your money. And then likewise, just to finish on the broker side, which I get to see, is when I was at Canada Life, I had one SKU, right? I give you this, right? And when you go over to that broker, he's got 67 different SKUs, and not everybody has the best deal at the same time, right? Somebody really's got a deal on 3 years. Someone has a deal on 10 year. It changes constantly. So when you have that team of 30 frontline brokers, they're talking every day. The communication is constant, and all of a sudden this credit union or that bank or this life co or that pension fund has the best deal. And what I say this week isn't the same next month. So it's a constant process. So for the best interest of the borrower, if you would, I do see value in that, and they create competition. There's 5 different lenders. If you're all bidding on it, guess what? You're going to bid strong. You're going to bid to win. Don't bid to play.
I love that.
So that's important, where that broker relationship is. And then the last point, and again, I'm not a broker, and I manage a team. But the person and I'm not picking at a bank, but that person.
We call them the red bank, blue bank, or green bank. That's how we reference that.
The light blue bank.
Person sitting at the bank, generally speaking, whether you get your mortgage and buy that property, whether it's residential or commercial, their income doesn't change. They did a little more work, they did a little less. Maybe it's relatively minor, if anything. Whereas that broker, they eat what they kill, right? Yeah. If they don't make you successful, they don't get paid. I like someone being aligned with my interest. If I'm a homeowner, I'm a buyer, I want someone aligned with me, and that broker is aligned, and he's absolutely aligned. If I'm successful, he's successful, and vice versa. So again, I agree with you fully that it's independent, objective, and there's a bit of separation as well.
Rick, well, one of 2 things is going to happen once this pandemic's open, once the borders open up again. Either you're going to come to Toronto and we're going to take you out with whatever your vice is, water, tea, coffee, vodka, wine, whatever it is. Or,
cars.
Well, I was going to say, or we're coming to Winnipeg and test driving those 2 cars behind you.
Would enjoy it. It's probably a great burger and fries, actually.
My kind of man.
You won Laura over. You won Laura over. What's the easiest place for people to either find you or find ICI? We're going to drop all the links on whatever platform someone's watching or listening.
Oh, yeah, no, good question. So LinkedIn, you can look on. If you can get a hold of me, directly, it's all there. And likewise, the Canada ICI website, and it'll showcase the team. And as I said, it's an awesome team. And again, I'm humbled every day, and I'm grateful that I'm part of that team. So the Canada ICI website, they're problem solvers. They're leaders in capital, and they're problem solvers. So at any level from 1 to 288 million, they've done it all.
Well, I love that. If you're watching or listening, make sure to go check out the episode links to get in touch with Rick specifically, and or a team member. And do you pronounce it ICI Canada or Canada ICI? I apologize if I mixed it.
It's Canada ICI. Yes.
Canada ICI. Perfect. All the links are in the description below. Rick, thank you so much today for your time. We really appreciate it.
Oh, thank you so much. It's been an honor to be part of the team. And as I said at the beginning, you guys are doing a great job sharing, getting this out. It's good news stories. Like, you are all about good news. There isn't enough of that lately, and sharing sort of that vision, entrepreneurship, positivity. The world needs more of it. So thank you for that. Awesome.
The best compliment we could get, really. So thank you. Thanks for being a part of it.